On Business Incorporated today, Ethiopia's inflation slows in August as food prices ease. And the European Bank for Reconstruction and Development to provide $300 million to finance Egypt's transition from gas to wind power. And Uganda pays first $65 million to Democratic Republic of Congo as war reparations. Hello and welcome to the program. I'm Will Ibong. Let's begin with intraday numbers from Africa, where sentiments were positive at intraday. Nigeria's NGX was trading flat, but in positive territory, while the South Africa's JSE was 1.15% up at intraday. Elsewhere, Egypt's EGX 30 was also in the green at intraday, up 0.72%, while Kenya closed in the red on Friday. And in the Middle East, it's also positive sentiments at intraday. Both the Abu Dhabi and the Dubai indexes were trading above 1%, while the Dubai was still within the index, still within the region. Saudi Arabia index was up more than 0.5% at intraday, while the Qatari index rose 0.72%. Now to Europe, where a highly anticipated round of labor negotiations begins this week in Germany, with workers' frustrations over inflation squarely at its center. IG Metall, the country's largest union, wants an 8% wage increase for the nearly 4 million workers of the metals and electricity branches. Employer negotiators want wages to stay put. They say rising energy and material costs pose a serious threat to their businesses. Stephen Beardsley with Deutsche Welle in Berlin joins us for more. Hi, Stephen. Why is there so much anticipation around these talks?
Well, one word, and that is inflation. It's been eating into the real wages of German and European workers in recent months. If you look at Germany alone in August, prices rising on average by 7.9, close to 8% annually, I should say. That's pretty considerable when you consider that workers' wages have not risen for the most part in the same time. So that means that their purchasing power is going down. Now, at the same time, businesses are also struggling due to rising costs, especially when we look at natural gas. That's a key component for many major industries, but it also drives the price of electricity, which is something that affects all households and businesses. Now, this comes on top of other challenges in recent months, including supply chain problems that businesses are facing, as well as a labor shortage. So you can see what's sort of coming to a head here with these negotiations. Now, they begin today in the German state of Saxony, Lower Saxony, I should say, and then they will begin elsewhere in other parts throughout this week. 3.8 million employees will potentially stand to be affected by the outcome of these negotiations, and the businesses affected are some that many have heard of: Volkswagen, Siemens, steel producer ThyssenKrupp among them.
So even the German chancellor has waded into this matter. Why?
Yeah, there was a lot of criticism earlier this summer when Chancellor Olaf Scholz met with leaders of some of the largest unions in Germany, as well as some of the largest industry groups. Now, inflation was the key word around these talks, but really it was about preventing a so-called wage price spiral. And that's this idea that when wages increase rapidly for employees, that it drives up inflation across society as a whole. Now, the plausibility of that concept is debated amongst economists, but there were also many observers looked at this critically, the fact that these talks were taking place at all, because, of course, what we see here is the politics sort of inserting itself into business and union strategy. And then also it appears to be coming down on the side of business in this case, believing that rapid wage increases would be of detriment to the entire society. Now, not much really came out of it that we could tell. It seems there was a discussion of the potential to pay a one-off payment to workers, sort of a bonus at some point during the year, but labor unions appeared to reject that, saying that would only have a limited effect to help their workers who are seeing steadily rising prices that likely won't go down anytime soon.
So how are European markets reacting to this, and what's the outlook for the week?
Well, this week, a lot of eyes are on what's going on in the UK. There's a series of new metrics coming out that really should help trace out how bad this economy is right now. It is one of the worst in Europe and among developed Western economies right now. When you look at inflation, when you look at consumer sentiment. Now, on Wednesday, we should see new inflation numbers, and then on Friday, new retail numbers. Today, GDP figures for July came out, and they saw a 0.2% increase, economic increase. That was actually lower than expected. It was expected to have 0.4% of an increase. Those may seem like small numbers, but that's one more sign that things are heading generally in the wrong direction. However, for markets, it was enough to help buoy major European markets today. The fact there was growth at all. And so we saw Paris, Frankfurt, and London all coming out in positive territory, and they'll be keeping an eye on those developments as they come out later.
Thanks so much, Stephen, for that update. Now over to the UK, where the country is still in a period of national mourning. It's actually a new dawn with the proclamation of King Charles III. Juliana Olayinka joins me from our London studio to bring us up to speed on what to expect from all of this. Juliana, how are you doing today?
Very well, thank you.
Now, Juliana, there will be a subtle as well as some visible changes in the UK, such as issuing of currencies, new stamps under King Charles III. Tell us more about this.
Well, yeah, this is very interesting. There are going to be lots of changes, not so subtle, I may add, over the coming days, weeks, months, even years, as we move from the late Her Majesty, the Queen Elizabeth II, to, as you said, King Charles III. There is so much happening, and we are in a state of mourning. As you said, the Queen's funeral will be on Monday, the 19th of September. But the Queen was one of the most recognisable faces in the world. And of course, that profile image, that famous profile shot of her is everywhere. I don't have any cash on me, I'm afraid. We are becoming cashless in this society, so I can't show you a banknote. But it's not just on the banknotes the Queen's profile is. It's also on postage stamps. QC, Queen's Counsel, if you're a senior barrister, that would be your title. And of course, because the Queen was also Queen in 15 other realms, including in Australia, New Zealand and Canada, she is everywhere. That has to change, and it will be changing. Not yet, because of course we are going through this mourning period, and her son, her successor, King Charles III, has yet to have a moment to breathe to take in his official portrait, which he will do very, very soon. Of course, he has to change his signature, and if you are a QC and you're watching, you will soon be a KC. So a lot of new terms that we have to get familiar with. There are, as you can imagine, billions of coins being circulated around the economy, as well as billions of banknotes, some of them newer than others. We just changed the £50 banknote to this polymer plastic with a new portrait, but that's of course all going to change. But hold your horses, because I have been seeing some pretty popular Nigerian figures on Twitter saying, oh, you know, everybody go and spend all the cash from underneath your bed. It does remain legal tender. We're yet to hear from the Bank of England, but I'm sure there will be at least 12 to 18 months once the new banknote is issued for people to be able to use that money. But of course, there are many people that may want to keep all of that cash as a tribute to the Queen.
Juliana, that's really very funny. You know, I just thinking of the money I left, under the mattress, as you mentioned, and thinking of spending real quick. But since the numbers have come in now,
I can look after it for you if you want.
Oh, definitely. I'll send it over then. GDP numbers have come in. The figures are quite, I think, positive sentiments, in the right direction, 0.2% up. And does it show any sign that the UK is going to avert the looming recession that, we're hearing about?
I don't think so, because things aren't great at the moment. But as you said, there is growth. GDP figures were released by the Office for National Statistics this morning, looking at the month of July. It grew by 0.2%. Economists expected it to be a little bit more than that. And I think one of the reasons why is because we had the Euro Championships, and the fact that the Lionesses, the women's football club, there was success. And when there's sporting success in the country, country, people do like to spend a lot of money, and we did see that, which is why I think there was a little bit of a boost. Of course, in the previous month, in June, there was a decline, a sharp decline of 0.6%, and I think a lot of economists attributed that to the fact that we had the Platinum Jubilee celebrating Her Majesty's 70 years on the throne. It was just a few weeks ago now, and she's gone to be with the Lord. But yes, so that's one of the reasons why there was a decline. There are some concerns because, of course, now there are 10 days of mourning. Not everybody is shopping. There are millions of people lining the streets across the different castles, not out spending, but out crying and mourning Her Majesty. Of course, flower shops are going to get a massive boost at the moment, but there is going to be a bank holiday on Monday, the 19th of September, and some retail stores will close. We saw Selfridges close out of respect on the Friday. That's the massive retail store here, the luxury retail store. So the declines are still expected, but for now, we can at least say there was some growth, at least in July.
Thanks so much, Juliana, for the update, and we'll definitely look forward to a happy reign on the Charles III. Thank you so much. Now, shares in Asia Pacific rose Monday on improved risk sentiment. The Nikkei 225 in Japan gained 1.16% to close at 28,542, while the Topix index advanced 0.75%. Travel stocks in Japan rose on reports that border measures may be eased further. Australia's ASP 200 was up 1.02% at 66,964 points, while to close the session, and that ended the session positive, while mainland and China, Hong Kong and South Korea's markets are closed for the holiday. These are the numbers we had for Friday. Now, stock futures were higher in early trade on Monday as Wall Street looks ahead to key inflation data to be released this week. Dow Jones Industrial Average futures were up 0.38%, S&P 500 futures were up 0.5%, and Nasdaq 100 futures gained 0.51%. The moves came after a winning week for U.S. stocks as all three major averages snapped a 3-week losing streak. The Dow added 2.66% on the week, while the S&P 500 gained 3.65%, and the Nasdaq Composite was 4.14% higher. Stocks have been volatile ahead of the September meeting of the Federal Reserve, where the central bank is expected to deliver its third consecutive 0.75% point rate hike in an effort to combat high inflation. Now, global oil prices fell early on Monday with the global fuel demand outlook overshadowed by COVID-19 restrictions in China and the potential for further interest rate hikes in the United States and Europe. Brent crude dropped 1.4% to $91.56 a barrel after settling 4.1% higher on Friday, while U.S. West Texas Intermediate crude was down at $85.45 a barrel. Prices were little changed last week as gains from a nominal supply caught by the Organization of the Petroleum Exporting Countries and Allies as OPEC Plus, a group, were upset by ongoing lockdowns in China, the world's top crude importer. Now, gold prices edged lower earlier on Monday, with cautious investors' focus being on a key U.S. inflation reading as it could influence the size of the Federal Reserve's next interest rate hike. Spot gold was down 0.2% at $1,712.69 per ounce, while U.S. gold futures were down 0.3% at $1,723. Spot silver rose 0.3% to $18.83 per ounce after touching a more than 2-week high earlier. Platinum dropped 0.8% to $873.68, and palladium fell 0.6% to $2,159.31. Now, after the break, more stories from the African continent. This is Business Incorporated. Welcome back. The European Bank for Reconstruction and Development, EBRD, will provide $300 million to finance the decommissioning of 5 gigawatts of inefficient gas-fired power plants in Egypt from 2023. According to the EBRD's regional managing director, the money raised in sovereign financing will be spent on stabilizing the country's electricity grid, adding battery storage, upgrading local supply chains for renewables, and retraining workers. This is part of the EBRD's $1.3 billion funding pledge announced by the bank's president, Odile Ronald Basso, at the Egypt International Cooperation Forum, which includes a separate $1 billion in financing for renewable energy projects. Egypt, a key natural gas producer, is trying to cut down on domestic consumption so that it can export more to Europe at a time of increasing energy and electricity prices and demand resulting from the Russia-Ukraine war at the moment. Now, Ethiopia's inflation has decreased in August compared with a month earlier, that's in July, due to a slower rise in food prices. According to data from the country's statistics office, consumer inflation fell to 32.5% year-on-year in August from 33.5% in July. Also, month-on-month inflation fell to 2.9% in August from 3.1% in July. The statistics office says food inflation dropped 33.2% year-on-year from 35.5% in July, which I mentioned earlier, while non-food inflation rose to 31.5% from 30.4%. Now, Uganda says it has paid the Democratic Republic of Congo $65 million in reparations for the invasion and looting by Uganda People's Defense Forces, UPDF, more than 20 years ago. In February, the International Court of Justice, ICJ, instead had ordered Uganda to pay $225 million to DRC Congo for loss of lives, $60 million for looting, plunder, and exploitation of natural resources, and $40 million for property damage. The payments were set to start in September this year and run until 2026, with Kampala paying $65 million each year to Kinshasa, and failure to do so will incur a 6% annual interest rate. We're going to take a track from the CIBN, which is about harmonizing the tax systems in the country. And we'll just take a quick listen and see what they have to say.
You are going to see discussion about payment system, how to collaborate, and most importantly, one of the major things you are going to see at that event is, the signing of an MOU on the payment, platform by, the Payment System Association. And the idea is basically to provide a platform that will certify payment system, among Africa, in the evolving African continental free trade, area. And the idea is basically that we need to harmonize the payment platform that will allow African member countries to consummate transaction using a unified payment system, even if they are using different switches, but it is going to be harmonized. Nigeria is also positioning. The small businesses are also being capacitated as much as possible to have to take advantage of that. There are so many opportunities that are available in Nigeria. If you look at cocoa as much as possible, you discover that it's one of the major, export earning for Nigeria as it is. And so we want to move away just from being raw material exporting country to a processing hub, which of course central bank has also advanced in terms of providing support. And that is what you see in the RT200, basically geared towards driving support to those that will also process as much as possible, and also the other needed support as that we are doing. So I think that momentum is gathering up. CIBN is at the center of it, building capacity, bridging the gaps as much as possible, also forging collaboration among other institutions. So we think that the time has come for Africa to take its right position, and Nigeria obviously is in the center of it.
Now we'll take a look at Rwanda's just concluded summit on biofuels in Rwanda, where discussions on biofertilizers took center stage. And of course, Nigeria is keen into this project.
I think biotechnology is a plus for food systems transformation, because you want to make sure that you are, growing the right food and you're keeping the environment safe, and that you're ensuring that people are leading healthy lives at the same time. So advancing biotech in food production and in the entire food systems transformation cycle remains critical. You're not going to achieve much without biotechnology. And biotechnology is not synonymous with GMO. Let's be very clear. Biotechnology, it's about the science of improving food quality, of increasing yield, and ensuring that people are leading healthy lives. We need to understand that. I don't think that we should be debating about the introduction of biotechnology in food systems transformation. I think what we should be saying is, how do we grow that local tech force within the continent to drive it with homegrown strategies, with homegrown technologies, and provide local solutions, to increasing our yields, but to also ensuring that people have access to healthy foods, because then what that means is that we are now reducing the cost of treatment at our hospitals. We're reducing the cost of spending money on addressing problems with stunting or malnutrition. Because you see, we need to ask ourselves, what's the cost-benefit analysis around this? You want to spend more money on curative measures, or you want to spend more money on preventive measures? And that's where biotechnology plays a huge role.
That's interesting developments, and we hope that this takes off in the next few weeks. So that's it on the program, Business Incorporated. I'm Will Ibang. Thanks for watching.